In today's lecture, we're going to understand how to take reversal trade, and this is a topic that has always been requested by so many people on this channel. So let's go straight to the point. Now, to take a reversal trade, you need to understand the smart money concept. Okay, so I have a video on smart money concept, and I'm going to be tagging it on the description of this video so you could check it out for yourself. All right, now once you understand the smart money concept, the next thing you need to understand is the candlestick pattern. Now, why am I always indicating that you all need to understand the candlestick pattern? Because once you understand the candlestick pattern, you can actually predict the movement of a particular pair or the direction of that pair. The candlestick pattern shows a lot about what is happening in the market, if the market is still trending or if we're going to be having a reversal. So once you understand these things, then you can be able to pick sides on where you want to be and where you don't want to be. Okay, now let's understand the smart money concept first, or let's rather use the smart money concept to tag along with the reversal concept. Now, let's say in a bullish market, we have a bullish market this way, we have a break of structure to this side. Now, this is how you met the market, broke this structure at this area, so you'll be waiting for a reversal to come to this area and continue moving in its intent direction. Now, what do we want to do today? We want to understand how to take that reversal trade instead of waiting for trades to come to your fair value gap area, which is here, or to come to your initial order block area, which is at this region. So we want to understand how we could take that sell reversal before we pull for the buys. Okay, and now this is only going to expand our opportunity in the market, creating much more opportunity in the market for us to make more better money. Let's say an order block is supposed to give you one trade, but with the reversal pattern, you get two trades from that market, and this could actually increase your win rate or give you a lot of profit and make you just feel happy. It's not really compulsory you take the reversal pattern, but it is necessary you understand how to take it, and if it is of a better benefit for you as a trader, so you could get much more better income in the market. Now, how do we know that the market is going to reverse and we position ourselves for that reversal? That is where the candlestick pattern comes in to play their own role. Now, I said if you want to validate a reversal area, you map out that last candle, such as this. Let's say in this area, you know, the previous break of structure is here, as we can see here. This is the last break of structure to this upside. Okay, now a lot of people will say this is a break of structure, but this is invalid because after that last candle, which is this white one here, we did not get to see three candles below it. We got to see one. We got to see just one. Even after that one, we had a fake out, which we are not going to count. We had this fake out, which we are not going to count. Let me take this out so you see it properly. So we had this fake out, we had this candle breach this area. Like I said, or I always say in my video, once a candle breach a particular area and it did not continue in the intent direction, everything is invalid. Now after that one, we had this second one, and at that, this second one also breached this area to this side, so everything here is invalid. So for those people that are going to use here as a break of structure and stuff like that, they're probably not going to catch trends, or they're going to get kicked out of the market because of a low understanding of market structure. You know, market structure is the skeleton of the market. It says a lot about the market. Now, to understand market structure very well, you need to understand your candlestick pattern. Okay, that will help that market structure formula to blend itself perfectly. Okay, and where for some people they might actually catch some trends in the market, but we don't do things that way. Yeah, we do things the right way. Okay, now we headed over to the last side. Which was this area. Okay, the last side is this area. The most recent side is this area now, and as we can see, we did not get to see prices come down three times, which is 1, 2, and we're waiting for the third one. We did not get the third one below this area. Now that says a lot about what you want to do. Okay, so that says a lot about what you want to do. So the next thing you get to do is to look for the next structure above. Okay, now once you get that next structure above, which is this, then you want to get that 3 candles below it to validate that area. Now let's go straight to the point without wasting much time. Now we get to see one, we get to see 1, we get to see 2, and we actually saw the third one. Means the whole of this area is said to be a valid reversal. Okay, now you can see where the candlestick pattern actually played its role. It showed us the valid ones and the invalid ones. So the invalid ones were shoveled out, where we focus on the valid ones to get better results. Okay, now having done that, we want to see if the market is going to reverse to a particular place using our Fibonacci. Then we take that trade. Now remember, we are on a 15-minute time frame Bitcoin, okay, and we got our market structure on the 15-minute time frame. I'm sorry I didn't tell you that earlier, but I'm telling you that right now. We got the whole market structure, so we are trying to look at the market on a 15-minute time frame, and we want to execute trades on a 3-minute or 1-minute time frame. Okay, but for now I'm going to be using the 3-minute time frame. All right, now since we already have that valid pullback, which indicates that the market is going to reverse to an order block area. Now remember, I do like looking for my order blocks this way. If you've been following my lecture, I put my Fibonacci tools from this down area to this up area. So like I said, I always want to check out this area and this area. Okay, this area here and this area. I always want to check out the 46.20 area and the 78.70 area. So I try to zoom it out properly so you could view it very well. So like I said, now we already have that valid pullback. Then we're going to be looking for prices to reverse to a particular place, be it the fair value gap area or the initial order block. Now let me tell you how this serves as a fair value gap area for us, and it also serves as an initial order block area as well. Okay, the 46.20 serves as 46.20 to 67 serves as a fair value gap area, while the 78.70 serves as the initial order block area. So we want to either buy trades or take trades on the fair value gap area or the initial order block area. Now I haven't seen that reversal that we've covered in this area. So I haven't seen that reversal that we covered in this area. The next thing we want to do is to execute the trade. Okay, is to execute the trade. Now when prices started reversing was at this region. Okay, we tap this region, then we head over to the smaller time frame, such as the 3-minute time frame, to check out this trade. Okay, now let's go to the 3-minute time frame to check out this trade. Remember, we already identify the structure on the 15-minute time frame, that everything is reversing. So we want to balance everything with the 3-minute time frame. I know it's kind of complex, but it's simple. Identify the structure on 15-minute time frame, identify that reversal that takes you into that fair value gap area of or order block area on the 3-minute time frame. And now why are you going to do that, and why are you not going to identify everything once? Because the market could just have a little retracement on the 15-minute time frame, tapping into that zone. Okay, tapping into some imbalances at that zone, and you might not be able to see this retracement very well on that 15-minute time frame. That is why we're heading over, we're combining the 15 minutes and the 3-minute time frame to make a better explanation. All right, now we're going to underline the last candle. Okay, the last candle serves as this area. This is the last candle here. Then we're going to see 3 candles above it. Now the first one is this. Now we had this fake out here. Okay, it doesn't really matter. This fake out doesn't matter, except we see another fake out below that fake out. So let me just change the color of this thing so you could have a better and broader view of it. So it doesn't really matter, except to have one more fake out coming below this area. So since we don't have one more fake out coming below this area, or rather breaking this area which the market started from, then everything is just as good as it should be. Now we had the second one, which was this, and the third one, which was this. You can see that balance at that area. So since we have this, or we already have this way, we could just map out this area here and string our Fibonacci tools from that up area of from that up area down to this side, which is our fair value gap area, to get that sell. As you can see, it's slightly tapped into it, but I would have entered a market order like I did here. I actually entered this trade a market order. Okay, I would have entered like I did here, and we actually came down to this area using a 1-to-2 ratio. Okay, and this is perfectly how to catch a reversal trend, and it's not that difficult, and this is just it. And you can do it in multiple places. You could do it for a sell to buy reversal. You could do it for a buy to sell reversal. What is a buy to sell? A buy to sell means you are having a bearish structure. Okay, we call it buy to sell, means you are buying here to sell here. Now sell to buy is something like this. You sell here, you know, to get a buy up here. We got this first buy, we got this second one. Now for us that, you know, we do 1-to-1 ratio, we could be able to catch a lot of pips in the market. Look at 1-to-1 ratio, we cut this, and 1-to-3 ratio, we actually cut this, and this would have gone better. Okay, before it started reversing at this, it almost broke this structure, but for some reasons it got to reverse back. Probably it might still go up at the long run, and this is how to catch a reversal trend. Be it you are using it for a buy to sell or a sell to buy, this is how to just go about it. See you guys next week, and make sure you subscribe to this channel, like this video, share this video to your friends and family. I'll see you guys in the next lecture. Thank you.